Hello friends, how you guys doing? Welcome once again to our channel. Alright guys, so in today's video guys, we're going to do something amazing, alright, based on popular request. I'll be getting a lot of messages on how somebody can trade profitably on a daily basis from Bitcoin, alright, making consistent money. So today's video guys, we're going to teach you how you can make consistent $100 profits on a daily basis trading Bitcoin. Alright, so if that sounds interesting to you, kindly subscribe to this channel and like this video. Alright, so let's dive into the chat, guys. Alright guys, so for us to be able to trade Bitcoin and make consistent money, we need to understand some basic tools, guys, and we need to have our tools set up. Alright, just like every specialist, every person, every professional has their tool in their field of endeavor. All right, so first of all, we need to understand our time frame. Okay, so the first thing we need to do here is to understand our time frame. So what time frame are you trading? We need to understand time, because time is very, very important in making money. All right, so if you are a day trader, which we are, and you want to trade, we want you to stick to 5 to 15 minutes, okay, in your analysis. 5 to 15 minutes time frame. All right, because this is where you catch the moves that can make you that fast money within few minutes of the day. All right, but if you are a beginner and trading this 5 to 15 minutes might be too difficult, it can go to 1 hour and 4 hours. All right, so the second thing that we need moving averages. Okay, we need moving averages. And in this case, we are going to use 20 moving averages, all right? 20 MA. You can use simple or exponential. It doesn't really matter. Why we choose 20 moving averages, like, this is where the money flows, okay? 20 moving average tells us that the trend is going up or the trend is coming down. So to make it simpler, we choose 20, okay? And we also need to understand the color change in, don't mind my writing, color change in candlestick. Okay, color change in candlestick, guys. Right, so we need to understand the color change in candlestick. I will explain as we get to the chart. So all right, so these are the three things you just need to understand. Now the first thing, we need to know our time frame. Okay, so we need to understand the moving averages, which we plotted in the chart, and the color change in candlestick, which I will explain as we dive into the chart. All right, so as I said before, now this is a Bitcoin chart as of today. This is Bitcoin chart, and this is 15 minutes. Let me stick to 15 minutes. So in case you want to sign up on the platform for you to trade, now irrespective of whether Bitcoin is going up or coming down, we make money using Binance futures or Bybit or Femex. So you can see the link below this video. You can sign up in any of them and be able to trade profitably using this strategy that I'm about to teach you. All right, so this is 15 minutes chart. So the first thing, as I said, we need to plot in the 20 moving averages. I already have my own here. In case you don't know how to bring it out, just click on this FX and type MA moving averages. You put it up. So once you put it up, you can see it here, 9 moving averages. You can come here to change it to 20. All right, you change it to 20, and that's it, guys. Okay, so I already have my own here. So let me cancel this. All right, so this is our 20 moving averages. Now, and the next thing we need here is to understand the color change. But before then, now you need to understand that there are 3 ways a market can go. All right, it's either the market is going trending, uptrend, or the market is coming down, or the market is going sideways. So these are just the 3 ways the market can go. You see, trading is easy, but just the execution of that process is very difficult, because trading is a performance-based business. Okay, because it has to engage your emotions, and whatever money is involved, emotion flares up and stuff like that. So that's why I want to keep it as simple as possible, or for us to play it for a long time. Okay, so now all you need to focus on when the market is going up and when the market is coming down. And how do you identify this easily is using this 20 moving average. You can see anytime the moving average is going up, that means the trend is going up. Anytime the market moving average is coming down, that means the trend is coming down. It's as easy as that, okay? Because most times you might not know whether the market is coming up or coming down, but just look at the moving averages, 20 moving average, and see where it's heading to. For instance, if I should take a look from the highest and the low, you can see from here now to here, you can see that market is what? Coming down as far as moving average is coming down. Many guys might freak out. Look at this one. This is just a correction of this move, but you can see from here to here the market is coming down, and you can see from here to here now the market is going up. The market is going up as 20 moving average is going up. All right, so now what are we how do we enter the market and how do we exit the market? That's the most important thing that we need to understand. Now, anytime that moving averages is going up, this is 20 moving averages, and the market is moving like this. The market is going up, the market is coming up, the market is going up, and then we have red bars. The market, this is a red bars. Sometimes as the market is coming down, then you need to first of all ignore red bars whenever the market is going up. Okay, that is the first rule. Ignore red bars whenever the market is going up. Sorry, whenever the 20 moving averages is going up. Okay, why do we need to ignore red bars? Because the market is trending. Okay, red bars is just there to confuse you. Okay, because when you see red bar, look at it here. Let's just go to direct to the charts. You can see clearly. Let's start from here. You can see the market is going up. You see anybody that sold here, for instance, most times will be trapped because you can see the bounces back again. You see the red bars here, it bounces back, see red bars, it bounces back, see red bars, it bounces because the market is trending. So you need to ignore red bars whenever the market is going up, and the other thing applies the other way around. Ignore green bars when the market is declining. Just like what happened here, you need to ignore this, you need to ignore this, all stops, all green bars, you need to ignore it. So the entry setup says this, that whenever the red bars are engulfed, when the market is trending, then it's a buy setup. How do I mean? For instance, take a look of it here. We have the red bars coming down, coming down, coming down here. Now, there are two ways you can choose to, for instance, look at this one, it's very steep. Now, you put a line here. You put a line here. Whenever this whole move is engulfed by a green candle, which happens here, then that is a buy setup. You can see, but this one is wide. The same thing applies here. Once this move here is engulfed here, you buy. You can see this one. Once this move is engulfed here, you buy. Okay, once this move is engulfed here, you buy. Okay, so provided the moving average MA is going up, 20 moving average is going up. Now you can use candle by candle, now which is preferably you can use candle by candle in the sense that you see a candle coming down. The red bar, you just ignore it. The red bar, just ignore it. You just watch. Once this green bars covers this, you buy, and your stop would be that bar that engulf that red bar. And when the market is going up, you put a stop here, you buy here, you expect your target. Okay, and the targets now might not be defined because it's just based on exactly where the market is when you look at the bigger picture. But because we are here on a daily basis, you can be targeting at least 3 to 4 bars. How do I mean? When the markets make a trend, what I always tell my students is that, you see, for you to catch the biggest move, not to shoot like elephant and eat like an ant, is to always expect this. Anytime you see a market trending, watch out from the whole trend and see if the market has trend up to 5, 1, 2, 3, 4, 5, because most times this is just the highest possible trend. Most times, okay, most times they can be extended and stuff like that. But once market is just starting, you just need to watch it and be protecting your profits as the market is expanding. All right, so you can see if entered here, you can just watch. This is 1, 2, 3, 4, 5. you are out of the trade. So just watch it, and that is how we go. All right, so the setting applies here. The market comes down, this is red, ignore it, this is red, ignore it. You can see this green did not engulf this, so ignore it. Well, look at this one, it engulfed this, so you are taking your entry here and you put your stop here. Taking your entry here, put your stop here, and there you go. This one move up per one, because you can see that if you take a look from the whole trend, you see this is already exhausted, and you see the way it moves here, and because this is just the last of the last wave from the trend. So you just watch, and that's just how it is. So if you go to what happened just today, and this is what happened today. I think we took this trade today. You can see until finally this moving average was broken here. You see the red here, we ignore it. Look at this one, and this big candlestick actually engulfed this red one. So we entered here, we put your stop here, the value is up. This another red here, you ignore it. As it's breaking, you entered here, you push it up. As this one is breaking, you entered here, you push it up, entered here, you push it up, and stuff like that. So here you exited all the packages and market start declining. So what we'll be watching out for here now is to see the reaction between the 20 moving averages and the market itself. All right, so the setting applies when the market is coming down. All right, so let's take a look on what happened when the market is declining. All right, so this is a sell-off, fast sell-off. You see a green here, and this green is below this 20 moving averages. You don't buy. All right, so all you'll be waiting for, let this green be engulfed. Okay, so as you draw a line here, probably as this one engulfed here, you are shorting the market. As it comes down, this one also engulfed, we are short, taking the market down. This one you don't buy until you get engulfed here. You take this trade. All right, you watch it, it breaks out and comes down again, and remember the market is still trending down. All right, this one is engulfed here, you take the trade down. All right, so this is so simple, and man, if you understand this, it makes you a lot of money. Now remember to subscribe on this channel, guys, and also remember to sign up using the Binance link in case if not, or the Bybit or Famous link, anyone that suits you, so that you'll be able to take this trade profitably and able to master it. Now what I advise you to do is to also test this strategy, test it, because it's one thing to learn a strategy, it's another thing to trade that strategy profitably. All right, so if I should go down to 5 hours, you can see that it becomes clear. Look at this is a trade setup now. You can see now if I'm trading on 5 minutes, potentially by this I should be able to enter the trade, because what happened, you can see the market is coming down, and the red bar has engulfed the green bars below the 20 MA, and it's a potential sell. And you can see now we're already in profit if you have entered the market here. All right, so the same thing applies here. You enter the market here, you put your stop here, and the market will start running. Based on what is going on, it must still drop more than this, and that is how you'll be profitable. You now see that if you are trading 5 minutes, you have more signals than 15 minutes, and that is what we want. Okay, ability for us to trade more and more on a daily basis to make more profits. So that is how we make money consistently. You can see the market is just dropping like a stone, and this is going to break this. I know that it's going to drop this way, it's going to break this. The way the market is dropping is going to break this, because I've seen this on the 1 hour, based on structural level. You can see we're expecting this market to drop. Bitcoin, we're expecting it to drop more, even to break this low. That's what we're expecting on Bitcoin. All right, so but I believe you have got something. So practice this setup, guys, and practice this and practice, so that you can internalize this structure and strategy, and you'll be able to profit from it as you trade the market. All right, guys, so thank you for your time, and don't forget to subscribe to this channel and like this video. See you on the next video.